Hi everyone, welcome to the Buffett and Beyond Research Saturday Stock Market Recap, May 23rd, 2026, and Happy Memorial Day. And remember folks, if you want to live on this beach like Jimmy Buffett used to walk at sunrise, then you've got to learn how to invest even better than Warren Buffett invests now. And the market, well, it was an up and down week for the market. That seems like topping action going on. But heading into a 3-day weekend, we usually see an upward bias, which is giving us a pretty good overall week. And our weekly stock analysis video, well, sometimes the big companies usually begin to fade into the twilight as they mature. But Google seems to be as involved as ever as it steps into Tomorrowland. Yeah, and our ETF video, well, our top portfolios formed for the best stocks in our favorite ETFs continue to do exceptionally well. And our model growth portfolio is almost doubling the S&P, while our semiconductor top stocks are up over 40% year to date, and our top tech stocks are up over 30% year to date. And let us look at Google. This is 1 year, so it's one full year. Black line is the S&P 500 down here. This is Google up here, and with the market up about 28% over the past 1 year, which is pretty good, folks. This stock is up 122%. Yeah, Google just keeps going on and on. And let us look at the S&P 500. What is going on right now? Well, right in the middle, you see it is approaching the past high, which was an all-time high, of course. So we're up this far, and I'm recording this Friday afternoon. We're up almost as high as we were just a week and a half ago. But this indicator up here is not as high yet. So we have to wait and see what's going to happen on, well, the market doesn't open until Tuesday. And down here, we still have a sell signal on our intermediate term indicator, but is it going to go up again? And if this market does make a new high, will this black line keep going up, or will it just roll over, giving us a sell signal? So boy, oh boy, it's going to be a tough week next week. And remember, earnings are just about all finished, and the only thing we have to look forward to is an end to the Iraq war, which may happen at any time, and then this market will really take off. And let us look at the same situation with the S&P 500 as we approach maybe the top of this upward volatility band in here. But this indicator up here, which is a stochastic indicator, if this turns down, that's a definite sell signal. So that's why we have to wait till next week. And of course down here, which is just what we just looked at, it has to turn up over this red line and get past this previous high to give us another buy signal. But boy, we're very overbought in here, and we're not sure the market is going to give us what we want to the upside. But it seems to be going back to here. We had 3 down days in a row, almost approached this 20-day moving average. So in other words, did we revert back to the mean or close to the mean? Yeah, pretty close. Is that what all that the market participants wanted to see? And well, talking about seeing, we'll have to see next week. Not right now, though, because we don't know where this is going to stop, and then what happens the following day after that and the following day after that. And for our portfolio protection, we still have June, July, and August puts. This is about a $200,000 portfolio. And the SPY was up 6 points this week, which is really pretty good. But don't forget, last week we were down. We were in that little 3-day decline. So even though we're up, we're still not at previous highs yet. Very, very close. Same with the QQQs, up 8 points. We have the June, July, August puts, and so we'll hope we don't need them. And some of you that have larger portfolios than $200,000 may have one each of these puts, and you feel you don't need any more at this particular time. You don't have to insure the whole portfolio. So it depends how you look at the market individually, whether you need protection or not. And some people like to have a little protection, about 12 to 15% under the market, just so you can sleep a little bit better at night. But don't forget, we have the dividend growth and income portfolio, which in 2022, when the S&P was down 19.6%, NASDAQ was down 34%. Our dividend growth and income portfolio, which usually outperforms the S&P 500, was down only 8%. Again, S&P down almost 20%. Our dividend growth and income portfolio down just 8% during 2022. So those of you who are in the stages of portfolio protection rather than all-out portfolio growth want to look at that dividend growth and income portfolio, because it's a really nice portfolio and you're getting your 10, 12% a year, and it's protected fairly well. I shouldn't say protected, but it does not go down as fast as the overall market, because there are stocks that have dividends, and that portfolio is paying us 3.7% at the beginning of this year in dividends, and those dividends help bolster a stock during market declines, because as the market or those stocks decline, people will buy more, because that means the dividend is going up relative to the price of the stock. So that's a good portfolio, folks, especially those of you who are in your late 50s or even the mid-50s. You want to start developing that portfolio so that income is more than 3.7% per year to you. As the stocks you have in that portfolio, we want to see stocks that have 7 to 8% dividend growth. And so if you start buying in your 50s or even your late 40s, by the time you get to retirement age, you're getting some nice dividends from that portfolio to help pay your expenses. And don't forget, you still need growth in that portfolio, and there is growth in that portfolio, but you still need a growth portion, like our growth portfolio, as well as the dividend growth and income portfolio, because you have to protect against inflation. If you get into your 60s, probabilities are pretty good you're going to get into your 90s. So you could have your portfolio cut in half relative to buying power in those 20 or even more than 20 years. So you still need income to pay your bills. You need growth in order to protect against inflation. Well, okay, folks, we had another good week, and it just came in the last part of the week, and we're looking good. And remember, if you want to sit and watch where Jimmy Buffett used to jog on this beach, then you want to learn how to invest even better than Warren Buffett does now. So, folks, go out, forget about the market. Remember what Memorial Day is all about. Keep your mind off the market. Stay safe, stay well, be with your loved ones, and we'll see you back here in a couple of days.